The S&P 500 and the NASDAQ 100, when you talk about specifically the Fed minutes that were released today, how they are going to impact the market going into tomorrow and the rest of this week and month. Now, overall, I want to tell you a few things before we go too in-depth in the video. I started buying some SPY puts near the end of the day today. Those did end up running about 20%, so I did trim a few, but I still have a lot of that position, and I'm looking ultimately to grab more. And I want that to be the basis, and if you understand or you think there's any bias here, there is that. I try to be as unbiased as possible. Before we get into the video, I have to ask you to do two things: like and subscribe. Every single day we post videos here on the market, and I give you, hopefully, my unbiased opinion on what we see going forward. I've been pretty liquid, taking a few trades here and there, but ultimately, I again try to tell you whether I think we're going up or down, no matter what. I show you the gains, I show you the losses every single day. If you want to get some more free content, the Twitter link is down below. I'm posting charts nonstop. I posted on there when I started to get those SPY puts, and I even told you the strike date on that as well. Also, I did highlight points about the Fed minutes. I'm going to go over more of that in depth here. I also highlighted the head and shoulders. I was, in fact, on the Qs again. So I'm giving you as much information as possible all throughout the day, even while, I can't be here on YouTube. I still try to pump out stuff for you, but let's get to it. So first thing here, I want to point out some longer term views and then shorter term. So we're going to shrink down into and narrow it down. And today's video is primarily going to be on futures just in general. So if we look here at the S&P, this is ES futures. Essentially since the 19th, you've been in this range, okay? In a tight range from basically 39.10 to lows of 38.10, about 100 points up and down, up and down. Now, if we go to SPY and I show you basically since, the 19th, 16th roughly, it's been a very similar range, 386 to lows of about, 377, back and forth, about a $10 range, but nonetheless very choppy, with the bulk of that movement coming, in the first hour, if not of trading, and then slow chop for the rest of the day. That's what's been happening here. Now, we've had more decisive movement, in my opinion, on the NASDAQ and tech, and this is kind of the going theme. Okay, we've understood this. We started to get a little bit of catch up on SPY, and then now it's kind of going back to the same. Now, when we go to something like the 2-hour chart here, I think it's really clear to see some intraday action here going all the way back to the 29th of December. You're getting a clear head and shoulders here forming out. You can just see it forming right now, and it's kind of looking pretty perfect, if you will. Now, again, I do not base my trading based on patterns or anything like that. I base my trading off of supply and demand and volume, because that is what gives you the answer. Supply and demand gives you the map, and then overall volume gives you your answer and confirmation based on that supply and demand. Now, we've seen on NASDAQ, we cannot break above our 2-hour supply level here, and then our 4-hour supply up here, which we have not even tested. So you're rejecting. You have invalidated your previous demand down here. That is worth mentioning. Your demand level here has been invalidated. We had to get rid of it. So that is worth mentioning, and we're still look like we're trending towards the downside. So going in a little bit deeper, before we start looking at these charts, I want to give you the hot stuff here. So we had our Fed minutes. I went over that pretty in detail with Discord. Let me go into some of the quick notes here. First off, they emphasize there will not be any rate cuts in 2023 for a second time, just in case anyone forgot. Also, participants generally observed that the restrictive policy stance would need to be maintained until the incoming data provided confidence that inflation was on a sustained downward path to 2%. We are nowhere near 2%. You need to understand, which would likely take some time. Okay, want to make sure you understand that. In view of persistent and unacceptably high inflation, several participants commented that historical experience cautioned against prematurely loosening monetary policy. I'm telling you, 2023, don't expect a rate cut. If it's going to happen in 2023, it's going to be very late into the year in Q4. Understand that. Going a little bit further, a number of participants emphasized that it would be important to clearly communicate that a slowing in the pace of rate increases was not an indication of a weakening of the committee's resolve to achieve its price stability goal or a judgment that inflation was already a persistent downward path. Now, that being said, we did have one of the biggest hawks on the market, Fed Kashikari. If you know him, he's been one of the biggest hawks, biggest bears out there. Okay, he did say today that it looks like, it's not definitive proof, but it's looking like we have reached a peak on inflation. Okay, keep that in the back of your mind. Going further, we have the overall sentiment around this. Now, this link will be down below so you can see. The minutes noted And this is, so you know, the minutes are basically just a repetition of what was said in the meeting. Just keynotes there. Noted, the officials are wrestling with two-pronged policy risk. One, the Fed doesn't keep rates high enough and allows inflation to fester. So basically, they need to keep them at a certain point so we don't get entrenched. Similar to the 1970s, which everyone knows was a long period of stagflation and it was terrible. The Fed keeps restrictive policy in place too long and slows the economy too much, potentially placing the largest burdens on the most vulnerable groups of the population, middle class and lower class, primarily middle class, which we have to anticipate will eventually happen at some point in time. Okay, you need to understand that. Participants generally indicated that the upside risk to the inflation outlook remained a key factor in shaping outlook for the policy. Participants generally observed that maintaining the restrictive policy stance for the sustained period until inflation is clearly on a path to 2% once again. Okay, we can go on and on and on there. Now, what I want to highlight from all of this, okay, as we get back into the charts, the risk, like they said, is middle class. And what you're going to notice there is going to be unemployment. Now, we're seeing demand get shredded. We've seen it from Apple. We've seen it from companies that have large amount of retail goods, Nike being one, right? The question, though, is will demand start to fall into unemployment also? Will unemployment start to slowly rise here? And that's what we want to happen. That's what the Fed has been demanding happen, right? And we have to wonder, what if demand, we're already seeing it really start to drop. It's getting hit across the board. Unemployment is not rising yet. But what if unemployment starts to rise and the demand starts to fall at an uncontrollable rate? This could be detrimental for the economy. And I know you're thinking, well, that would be good for overall inflation. That could be very terrible for businesses. And that's why I believe this earnings quarter, specifically for Q4, has the potential to be so terrible. I think we need to be prepared for this specifically in the short term. The next 3 months, I think we have to have all eyes on this earnings specifically. There's no real reason for us to be trending to the upside, if you will, here. We've had no real good news. We have basically news that rates are going to stay terrible for the next year, okay? 12 months roughly, starting now. That's where we're at. So my fundamental viewpoint remains the same. I'll have a deeper dive in my long-term viewpoint on Sunday, but for now, that's it. Let's get into these charts. So coming out of this, it was pretty flat overall. Coming out of the Fed minutes, you didn't get too much action. You had a pretty nice, some wick action, if you will. We did start, you got a big drop and you came back up. But nonetheless, I still see downside potential. And I believe we have to stay on that focus. You have CPI on the 12th, and that could be your potential catalyst to get any type of bounce. But until then, I have to remain a bear. If we look, we're holding below 11,000 once again. You can see still we are trending in that level also. It's worth mentioning. Okay, on the 1 hour, you can still see we're trending down also, making lower highs. We did make a little bit of a higher high here, but you're still making lower highs on a 4, 2 hour, everything like that. I am anticipating a test down to the 10.6 and 52-week lows, most likely. Going into ES, you have not tested your demand yet. In my opinion, you will be testing your demand very quickly. I've been a big advocate for Q puts for myself. I have switched the table here and I have looked at SPY puts. They are moving fantastic for February 17th. Go look at the contracts for yourself. I believe the value is there for me. That's why I'm trading them. And I always try to be transparent with you. And you're going to know my winners. You're going to know my losers. So I want to highlight that. Okay. A little bit of viewpoint too with Discord. If you're interested, link is down below. Going into this, around, you can see, check the timestamps. 121. I bought SPY puts, 363, February 17th. At around $4 a contract. I bought them actually like, $4 on the dot. They did get a little bit cheaper. They started dropping. Okay, I wanted to emphasize people that I will like to add more if SPY goes up also. Within the next 30 minutes, those went to 4.8, up 20%. I had to trim the position no matter what. Okay. That's my position right now. Okay. I still expect more downside here. And what I was saying in Discord is even if we start to pop up a little bit, I'm still preparing myself for more weakness on this economy. There is no strength from the buyers. Today, we had decent buying activity. Okay, I'm going to tell you that right now. If you look at the trading on the day, we had decent upside, and going into yesterday, decent upside movement. But the volume did not justify what was happening. It did not justify a switch in my stance. What it did justify, in my opinion, was a retracement on the market, setting up for more downside. That's what I am expecting here. You are basing, and it looks like you want to start dropping again. If we look at something similar to around the daily time frame, you can look back and give you anything type of similar, right? I'm going to go back to something like June, back here, May and June. Similar action that we had down here. You did pop up, you ended up coming right back down. This is just my perspective of what we're seeing. Another basing like we saw back here in April. This is just what I assume we're preparing for. You can see here also on the daily time frame, we're holding below that massive level, that key SR level, right? It was a previous demand that we had, our supply level at 39.20, and now we can't even get back to that level, right? These are key areas we have to be focused on. If you look here, you can actually notice on the daily chart, it's a clear pennant, if you will. It's a clear pennant. But I would argue that it's an almost even more clear bear flag if we really identify from where this is kind of starting right about here. I think it's one of the most clear and easy things to identify, but that's just me. But you can notice the pennant even more, if you will. Going into SPY, I think it's even more clear. Once again, clearly making a bear flag towards the downside, not able to make a higher high. Has to concern you. Has to concern me. That's what I'm looking at here. Now, as for our stocks, I know you're going to have questions, and I'm going to go into those in a second. Let's look at VIX really quick. Again, we even saw some downside on VIX on the day with this movement, okay? I believe VIX is preparing for a pretty volatile move to the upside. I think you have to be looking at that as you are trending down in the low 20s still. We know this $19 to $20 range over the past year has been what? It's been nothing less of a massive spring zone that we've seen over and over and over. So as long as we remain close to this, I have to assume downside on the market, roughly. DXY, what are we seeing here? We're still seeing at this key level, I will say that. But again, I still expect downside. I know people have questions. I like to mention it, though. The 10-year versus the 30-year, very interesting chart for me. If we look here, I'm anticipating some extreme volatility near term, okay, on the yield. But what you can see is you are breaking below that higher low trend. This is the only bullish thing, in my opinion, that can be out there. But I do expect volatility nonetheless here, and I want to see that. I still think you're going to be inching towards 4% once again on the 10-year yield. I have to believe that, specifically here on the 10-year. You had a little bit of a retracement day, but you still look very much like you're pushing towards the upside here on the 10-year yields. TLT. You saw some upside on the day, and you're even seeing a little bit on the after hours. You're seeing you respect that overall trend line down here, right? We can go back. This is almost a 1-year trend line since the beginning of this bear market, right? You can see that forming here. You can actually bring it down just a little bit about right there. Bouncing right off of it. I do not think this holds up. There's still massive orders expecting downside below 100 on the TLT. You need to understand that. It has to be a giant concern for myself looking at this market also. These are the big signs and the big things that we have to be looking out for. Again, these are my concerns, and this is how I am trading this market. I just like to be as transparent as possible. Going into some stocks, I think you're getting opportunity here. I posted this on Twitter a day ago. You had a test yesterday, and you might get another test at the 150 level on NVIDIA. I still expect a rejection from this point. You still look terrible. I still want to see downside 130, maybe even 133. Next up, let's talk about some winners. Some big stuff happening. If you've been here, you've been looking at Microsoft. I told you yesterday I still loved it. Guess what? Boom. Came out with a new target to the downside. Came straight down to 1 to 228, filled that gap. Beautiful. Congratulations if you played it. Netflix, I mentioned it yesterday. If you can get above the $300 level, let's say you're bullish. You're pushing up really nice here. I'd be watching Netflix to hold this level into their earnings. Even with downside of the market, I still think Netflix is one of the strongest names out there, and I still think they have the capability to continue to perform. Okay, I will say, looks like you're trying to form sort of head and shoulders here. But again, I still think Netflix has the fundamentals to continue to perform like they continue to do quarter after quarter ever since the Russia stuff happened with them. Still like them as long as they're above 300, 303-ish, give or take. Next up, we're going to talk about Apple. I think Apple is one of those must-watch stocks right now. If you get back below 125, I think it's one of the easiest shorting opportunities. Right now, you're just trending and you're trying to hold that 125 support level right there. If you get back below it, I anticipate some gnarly downside. I would even be watching for a break below previous 52-week lows at 125.88. That'd be my next level to be watching. These are key areas I'd be watching and what I'm looking at specifically here in the market. Okay. I don't want to go too much further. I think the focus has to be on what was said for minutes. Okay. I think this has to be the focus. I wouldn't get lost in everything else. Focus on what's important. This is what's important. This is what the market's going to be reacting to until CPI at least, and until we get some good earnings coming out. Okay. We have earnings come out, I believe, not next week, the week after is Netflix on the 19th. And then we have Tesla that week also. So it's going to be very important. But until then, I have to expect downside here on the market. And that's what I'm looking at. Okay. Have a good one. If you have questions, ask down below.